It's not your price book. It's not conversion rates. It's not your booking rates. And it's definitely not the lack of sales training.
Toyota built one of the biggest and most profitable businesses because they focused on...
If you want to run a profitable plumbing business, all you have to do is...
Jared.
What's up, Joel? How are you?
Man, I'm pretty good.
Cool.
Yeah.
Welcome to Podcast Wednesday, dude.
Welcome to Podcast Monday, Jared.
I don't know why you always got to throw me off my game like that.
I just like to call it like it is.
Right on. I can respect that.
Okay, all right. Yeah, man, what's going on?
I started my cheeseburger diet today. Not really, though.
Oh, I was about to ask. I was wondering if you were actually doing that.
Started 5 minutes ago because I just ate a cheeseburger.
And then did you also just remember that you had talked about doing a cheeseburger diet?
Yeah. I watched, man, that video came out a long time ago. I finally watched it this weekend. I never have seen it.
It came out a long time ago.
Dude, it looks like it was filmed in the 90s.
I'm pretty sure it was probably...
When did Super Size Me come out? Because it
had to be early, somewhere in the early 2000s.
Yeah, it came out after Super Size Me, which is pretty phenomenal that our technological abilities have come as far as they can, or as they have. Because the quality of this podcast,
sure,
the audio and the video quality of this podcast are better than a professionally made film in the early 2000s. That's what's crazy.
Yeah, that is crazy because we're not that far away from the early 2000s.
Yeah, and accessible to plumbers. A plumber can put together a podcast now. It's amazing.
Yeah. Yep, he just needs a kind of medium-sized room in his house and a bunch of equipment.
Yeah. Not even that much equipment.
No, not really.
Yeah.
A couple cameras. And you could put your iPhones in place of those cameras.
It would still look better than...
Yeah,
Homeboy's video in that one movie. Yeah. So Super Size Me came out, and then this dude came out with a video or a movie where he ate McDonald's for a month and lost weight.
Did he think he was going to lose weight, or was that just the thing?
No,
that
was
happened?
The plan. He was I'm going to show you what really happens when you eat McDonald's for a month. I'm going to lose weight and get healthier.
Interesting.
And he did. And his doctor was like, "What the crap?"
Huh?
Because he kept his He was basically trying to debunk the myth that saturated fats are bad for you, animal fats.
Yeah, I gotcha.
So kept it to the beef, kept the fries to a minimum, didn't drink any soda, and kept his calories. So he kept his carbs under 100 a day.
Yeah.
And kept his calories under 2,000.
Gotcha.
And then didn't worry about saturated fats.
Yeah.
So then actually in the end of the movie, he went another month just eating butter and lard and all sorts of stuff.
Just went really hard on the saturated fats thing.
Yeah. And his cholesterol got even better.
It got better?
Yeah.
What do you mean it got better? The number went down?
Yeah. It's not about the number really. It's about the ratio. Oh. That's where most people go wrong. They think there's LDL and HDL. They think there's good cholesterol and bad cholesterol. Yeah. It's not really that one is good and one is bad. It's the ratio between the two. That if your ratio's off, one of them is way higher than the other, I think you want the distance between them under a certain amount.
Gotcha. And so then the numbers don't really matter so much as long as that relationship is okay?
Correct.
Interesting. What
Don't quote me on that.
Yeah, well what contributes, how do you keep that within?
You got to eat saturated fats.
Yeah, okay.
Is what it boils down to.
So is one of those fat pillars derived from one saturated fat and the other is a different type of fat?
It contributes to with what your cholesterol looks like. And so you get...
The quality of your cholesterol.
Yeah. And so you get because what happens is one of the cholesterols goes in and cleans up and then or does something, gets something good. And then the other cholesterol comes in and cleans it up, right? And if your ratio is off, then that cholesterol starts going into your cells and it produces I want to say it's a fluffier. I don't remember. But it's one of the characteristics of it is off, right? Because your ratio is off and it starts taking that and basically clogging your arteries, right?
Interesting.
It's not so much as it's like blaming spoons for Rosie O'Donnell being fat. It's not the spoon's fault.
That's what I did.
Right? It's let's ban spoons because Rosie O'Donnell's fat.
What you do is you replace them with spoons.
Spoons, and then you're set.
Nice, good.
No.
That's good.
It's so they're blaming cholesterol for, heart disease and all these problems.
Right.
It's not really the cholesterol's fault.
Right.
It's the ratio of our cholesterol in our body
Interesting.
mixed with a bunch of other,
Yeah,
stuff.
sure. There's a bunch of other causal factors too.
Yeah.
Huh, interesting.
And I'm not one to like go into all the super details of it. You just tell me something that works and give me enough reason for it to make logical sense. And I'm bought in and I forget all the reasons of why.
Yeah.
But it makes sense.
Yeah, eat a bunch of butter.
Yeah. It was a good movie. I liked it. It was fun. I don't remember why I got on this train.
I don't remember why. Oh, because you're going to start your burger diet.
Oh, yeah.
That's where it came from.
Burger diet.
Yeah, your burger diet. You can just replicate what this guy is doing.
2 double quarter pounder burgers a day.
Yeah, and that's it.
That's like optimum diet. Like, who doesn't want that? I love burgers.
Yeah. How many calories do you burn when you work out? Do you know?
I have no idea.
Because you probably have to offset that.
I think I tracked my calories for a while. I was burning like 2,700 calories a day.
Really? Doing this? Like doing what you're doing right now?
Yeah.
Really? Just like sitting 2,700? Actually, I don't know how you track calories that you burn like passively. I don't know how you do that.
I mean, if you wear your Apple Watch, it just tracks your heart rate. I don't know how accurate it is, but
Yeah, but when it tracks
probably
my
close.
like caloric burn is like nothing when I'm just chilling.
like what?
I don't know. It doesn't tell me anything. Like passive burn, maybe? Maybe that's what
It'll
it is.
tell you that.
It's like really small.
It'll tell you.
Like mine was really small.
It's typically like a guy who sits on the couch all day, 2,000 calories.
Interesting.
Or close.
Yeah, I guess that makes sense. Yeah, okay, now that makes sense. That tracks.
Yeah. I mean, and then you, like, if you wanted to burn 3,000, you got to go for an 8-mile run,
True.
basically.
Yeah.
Right.
Yep, true.
So, not too many people do that.
Yeah. Yeah, I just know on my run days, that's when I'm like, oh, dude, I got to eat a lot more today. Because to maintain that caloric intake that I'm still gaining muscle, I have to then eat all that I burned.
Have you been alternating, like, eating before you run and not eating before you run? Like, running in a calorie deficit?
I usually run in a calorie deficit only because, like, I'm running really early in the morning, and I just eat, like, a banana, and that's it.
So, you should try just scarfing it down and then going for a run.
Eating, like, a bunch of food?
Yeah.
Interesting.
Because it's going to be important because you're going to be running
Yeah.
and you're going to get hungry and
You're going to want to
have
scarf
eat.
a bunch of food.
Yeah. And so the better ability you have to do that and not feel sick
Yeah.
is better, is good.
Yeah.
Interesting.
Interesting.
Good times.
Yes. Yes. Cheers. Yes.
Cheers to
quite.
you.
Yes. All
Cheers
right.
to you, lad.
Yes. Cheers to the governor. Yes.
Dude, we're going to talk about the real reason why people don't make money in their business.
Jared, we've talked about this before. I already know what you're going to say.
What?
You're going to say, well, dude, you're not charging enough. You don't have marketing.
So that's true to an extent.
I told you.
Well, I know, but we're going to talk about something different because like the number one mistake that people make is they don't charge enough.
Sure.
We see it all the time.
Yep.
And if you're not charging enough, none of this other stuff is going to matter.
Sure.
So, like, I guess boil it down to the basics. Yes. The main reason people don't make money in their business is they literally just don't charge enough for their service.
Yeah.
And so there's not enough money on the front end, right, to actually make any money. If you're struggling with your pricing, or if you don't know your pricing, if you don't know why you're charging what you're charging, if you don't understand your cost of doing business and how that relates to how much you charge the customer for your services, if you're on YouTube, in the description of this video, you can get our plumbing business playbook. It's free. It's 89 pages. On one of those pages, there's a link to our hourly rate calculator. You can get our hourly rate calculator and fill it out and watch a 45-minute video on how to do it. Super important, okay? Yeah. Number one reason people don't make money. They just don't charge enough. Very simple equation. Cost me this much to run my business. I have to charge this much.
And if you're charging what your buddy's charging at his business, chances are you aren't charging enough.
No, there's no such thing as going rate.
Yeah.
Going rate is guessing on your pricing, and that's the last thing you want to do. No other company in their right mind guesses on their pricing.
Yeah.
Pepsi doesn't look at Coca-Cola and say, they're charging this, so I'm going to charge this.
Yeah, their marketing budget is this. I'm going to do the exact same.
Exactly. It's not how it works.
Yeah.
Rigid, when you have a pipe wrench, doesn't say, Husky is charging this for their pipe wrench, so I'm going to charge this for my pipe wrench.
Right.
No, they say, this is what it costs us to make our pipe wrench.
Mm-hmm.
How much do we need to bill the customer for this pipe wrench to make a profit?
Right.
So that's how you got to price your plumbing business. It cost me this much. I got to bill this much to make a profit.
And even if you're just copying price of your buddy's shop who's like 500 or 600 bucks an hour, like that's better, but you still don't know what you're doing. Like you still don't understand the mechanism, the system that is pricing.
Correct. You have to know your numbers. You have to understand your numbers, and you have to understand how they affect your P&L at the end of the day.
Yes.
The P&L is the ultimate measure of business success.
Yep.
How much made it to that bottom line?
Yeah, exactly.
That is the ultimate measure.
Yeah.
Not enough? Well, you got a problem, right?
Yep.
Okay. So the kind of second silent killer, let's say you get your pricing fixed. You go through our calculator. You're charging $400 plus an hour. And you're still not making any money. And you're busy. You're busy. You're charging enough according to your calculator, and you're still not making any money.
What do you mean by busy? How busy are we talking?
You're busy. Your guys are all busy. They're out there doing work, producing revenue. They couldn't physically do more work, right?
Okay. So it's not just you in this scenario. It's you got guys in the field.
Yeah.
Okay.
Then what is it? Right? Because this happens.
Yeah, happens a lot.
Happens a lot. What are the reasons that you wouldn't make money? What do you think they are?
You're not efficient. You're not efficient enough.
Efficiency is pretty good.
Maybe you're not marking up your materials.
That's another good one. Let's say you're marking up your materials 120%,
Okay.
which everybody should do for really good reasons.
Yeah.
If you don't know, we'll give you the short gist, but then go watch some of our pricing podcasts because we'll talk about it.
Yeah.
But
I don't think we've ever done and this happened in like our How to Price Yourself 2024 episode where we went into the P&L. I think we went into the P&L pretty deep, but we've never done a strict, this is how you read your P&L.
yeah, maybe we should do that.
Yeah. Just to have a standalone
If you
thing
want
about
that podcast, comment down below. I want a P&L podcast, and then we'll make one.
Yeah.
How about that?
Yep.
So the reality of it is, on your P&L, if you want to be a successful plumbing business, you literally can't operate on less than 50% gross margin. The way your P&L works is you have top line revenue, which is like total sales, gross sales, total revenue, gross revenue.
Right.
It's how much money your company build out. Under that, you have your COGS, cost of goods sold. And part of that COGS is your materials. Okay.
Mm-hmm.
And then underneath that, you have gross profit.
Yeah.
So gross profit is total revenue minus your cost of goods sold. So total revenue minus cost of goods sold has to equal 50%. Bare minimum, preferably higher. If you have materials and you mark them up 100%, what profit margin is that?
If you have materials and you mark them up 100%.
Yep. If I said, I bought this mug for $20, I'm going to sell it to you for $40. What's my profit on that mug?
50%?
Yes. Mark it up 100% equals 50% profit.
Yeah.
Right? If you don't mark them up 100%, you'll never hit 50% gross margin.
Yeah, gotcha. And then if you don't do that, then your P&L is going to be weird.
P&L is going to be weird. You won't have enough money left over for your overhead.
Yeah.
And
it's going to suck from your net.
It's going to suck from your net.
Well, maybe this is a better way to phrase it is you just won't have net. You'll have enough money for your overhead. It'll just get sucked out of your net.
No, you might not have enough money for your overhead.
Oh, you might actually just go, I'm losing money.
Yeah.
Okay.
Yeah.
Yeah, when you're not marking up properly.
Yep. For various reasons. You're getting rid of a good chunk of your income. Like usually it's 25% of your gross income is materials typically. It varies depending on how much service work versus install work you do. But so if you made $1 million top line, 250,000 of that was materials. You build like cost, right? You build 500,000 for that materials. So if you're not marking up your materials 100%, you're missing out on $250,000 that could potentially go all the way to the bottom to your net. right? So in that case, like 25% of your revenue just disappeared, but you still have 30% overhead. If anything goes wrong, you only got 5% left,
Right.
right? To go to the net. If anything goes wrong, you're cutting into your overhead. If you have 2 slow months, you're screwed. You're gonna have a rough year, right?
And that's something that's not solved by just getting busier, correct?
No, it's just a matter of saying no. We mark up our parts.
Yeah.
Yeah.
Yeah, because I can hear some guys like having these problems and then thinking to themselves, maybe not knowing their P&L structure, like, well, if I just get busier, then that will translate to more money in my bank account.
Yeah, they typically think I need more work.
Yeah.
Or they typically think I need my guys to do better.
Yeah.
I need sales.
Or I need better guys.
I need better guys. How come my guys can't sell like I can? I need sales training for my guys, which is fine and dandy, but sales training doesn't matter how much they sell. If you're not priced right and you're not marking up your materials right, you're never going to make any money.
Yeah, because
sales should be like the last business improvement.
Yeah, because what will happen is you'll see potentially, if you just got more work, then you would see bigger revenue numbers, but the P&L would still have the same percentages.
P&L would still be low.
Yeah, you'd still have no profit even though you did more revenue.
Correct.
Yeah, because you didn't adjust any of the
More
things.
revenue is worthless.
Yeah, revenue doesn't mean anything.
It means zero.
Yeah, profit
right?
is the thing that actually
profit
makes sense.
matters.
Yeah,
it's
net
like,
profit specifically.
And I say this all the time. It's like, do you want a $10 million business that does 10% profit or a $5 million business that does 20% profit? Which one would you rather have?
A $10 million business that does 10% profit.
Yeah.
So what, $1 million? And then a $5 million business that does 20% profit, which would be what, 1.25 million?
Dude, that's math. I don't know.
Yeah, you're the math guy. You asked me like I know.
No, what's 10% of 5 million?
10% of 5 million?
Yeah.
Oh, 500,000.
Yeah. So what's 20
million?
million? They both make $1 million bucks.
Right. But one is probably a substantially less complicated business.
Well, it's half the work.
Yeah. Yeah. Oh, okay. I see what you're saying.
And
Half
that's
the
the
work
thing.
and the same amount of money.
This happens every day. There's $10 million businesses out there operating on 6 or 7% net margins.
Yeah.
For no good reason. And there's $5 million businesses out there operating on 20% margins. I would so much rather own that.
Yeah. Yeah. Because you
know
get
what
to
I
keep
mean?
more money and don't do as much work.
Yeah.
Yeah.
Yeah. I don't know.
Okay. So your materials are marked up properly. You're priced properly.
Correct. You don't need sales training. Actually, sales training might be part of this problem that you're having.
Because you're thinking so much about sales training, or you're investing in sales training, or
Yeah, correct. So I've got 4 things on my list here that nobody can see
except for me.
except for you.
Don't worry, guys. It's actually there. There's a list.
There's actually 4 things on
we can
there.
both see it, so it's not made up.
Okay. So I got 4 things. We're going to run through all 4 of these things, right? But basically what ends up happening is you inflate your overhead, right? So back to the P&L, like we were talking about. You're looking at your P&L and you build out $1 million, and 250,000 of that was materials, and 250,000 of that was technician labor and commission and subcontractors and all that stuff, right? And you have 500,000 left. 50% gross margin.
So far, so good.
So far, so good, right? Now, you should be able to scroll down to the net profits at that point for this company. And it should be 15, 20%.
Yeah.
Somewhere in there. The higher that gross, the higher the likelihood that is. Okay?
Okay, gotcha.
Okay. So if we scroll down to the net and we see anything lower than what we want, what does that mean?
Well, it would probably mean that we got more overhead. Because that's the only thing that left to cut into profit.
Yeah,
is
you're
overhead.
fat on overhead. You have a problem with overhead, right? So there's lots of things that will affect that. Some of the things you don't need to worry about. 4 of the things on this list, actually the only 4, you do need to worry about. So some of the things that you wouldn't need to worry about is, okay, let's say you're growing, okay, and you made a substantial investment into a bunch of tools.
Yeah.
And it cut into your net, increased your overhead for the year, right?
Yeah.
That would affect that P&L.
Yeah.
Okay. The other thing you got to think about is,
And that wouldn't matter?
well, it would matter, right?
You just have to recognize it.
You go, okay, why are my nets low? Oh, I made a bunch of investments back into the company.
Gotcha.
I bought a bunch of tools and drain cleaning equipment and all this stuff, right? That's going to cut into your profit.
Gotcha.
For whatever month you bought it for.
Gotcha.
Okay.
Yeah.
Okay. Now, keep in mind as well that when you're doing business and you're looking at your P&L, like you should look at that thing monthly. Number one. Okay. When you're doing business, like a lot of guys will go get accounts at supply houses, okay, or suppliers or whatever you want to call it, or even like gas cards or those kinds of things. And what they'll do is they'll rack up a bill. So typically it's like 30 days at the supply house. They tally it all up, and then you have another 30 days to pay it off.
Sure, yeah.
And so they'll be paying like January's bills in March, right?
Yeah, I'm already starting to get confused.
It's confusing. So, and the reason that's a problem is because then you don't have an accurate depiction of what really happened in January.
Yeah, because you're paying for December's bills.
Yeah. Maybe March was a low month, and January was a good month. So your material costs in January were really high.
Yeah.
And then you're paying them off in March, and it looks like you were like super unprofitable
Yeah. Yeah.
on your gross, but really you weren't.
Yep.
It's just you were paying your bills all funny, right? So the best thing you can do is to make sure and pay all your bills for the month in that month,
Yeah. So
or as close as possible.
for your company, do you hold accounts at supply houses? Is that how you do it?
We have one account. Otherwise, everything else goes on credit cards.
Gotcha.
For this reason. The only reason I have an account at that one supply house is because they have an online portal where you can go in and pay your bill.
Gotcha. So you don't have to wait for like a invoice of some sort to just pay the whole thing.
I don't have to wait for a statement. I can just pay it right away.
Yeah. So you can, so essentially, and when you pay it, is that like a routine thing that your GM handles, like the credit cards and everything, or how does that work?
My wife handles that.
Gotcha. So
She pays credit cards. She pays credit cards, pays the vendor. She does that every day.
Oh, okay. So it's an everyday thing. She just goes
Every
in,
single day.
and she just brings the balances all to zero every day.
So we're a day
Gotcha.
behind at most.
Gotcha. Cool.
So maybe the very last day
Yeah.
of February, bills might end up in March.
Yeah.
Maybe.
That's a much smaller thing to be aware of.
Very small.
And then that would probably only really matter if for some reason on that last day you had to go buy like 5 boilers or something.
Correct.
Weird. Yeah.
Yep. So, and which is a good point. If you buy 5 boilers, right? Let's see, we do heating, so we buy a lot of boilers, big ticket item. So that would cost us like, it's like $5,000 a boiler. So what would that cost? $25,000
All day.
It's good math, dude.
Dude, you're just crushing it, bro.
So
Man.
that'd be like 25 G's,
Yeah.
right?
Yeah, on one day.
That if we bought the last day of March and then didn't go install them until April, say we're installing them on April 1st, and it takes us, a couple weeks to get them installed, and then we're billing for these boilers mid-April.
Yeah.
Well, March is going to be low $25,000, and April is going to be inflated $25,000.
Yeah, because you don't have that. You're not buying those parts in there, so you might look at April and be like, "Dang, we killed it this month."
Yeah, so that's why you should not go buy materials until you have 50% down. Like typically, your material cost is roughly 50% of the job
For those big jobs.
for those big jobs, right? For that reason, so we would buy the boilers and either bill for them,
Yeah, right there.
or
to get 50%.
we would say 50% down,
okay.
and then we would go buy the boilers.
Gotcha.
That way, if we bought them last day of March and we've already billed half down, our P&L is solid,
Gotcha.
right?
Yeah.
Because you can't look at your business and have inaccurate information.
Yeah, that's definitely a way to not have a very profitable business. Probably a
Correct.
very confusing situation as well.
Yeah, because here's the thing: your whole goal with your business is to make your P&L look good, right?
That's a good way to put it.
Yeah, it's the ultimate thing you can look at. Like
Yeah.
at the end of the day, that's what matters.
The P&L seems to be a good like thing to look at where you can then go and identify problems and then go think about tweaks you need to make. Instead of just, I think what a lot of us do is where you're just
Correct.
like, what should I do? What feels like the problem?
They
this
look at it
month?
and go, where'd all my money go? And they have no idea.
Especially if you're just like looking at like QuickBooks. Like if you have QuickBooks but you don't have a bookkeeper, like
Oh, don't do that.
like
If you guys are making money, get a bookkeeper.
yeah, and like I'm trying to think because I'll have conversations with guys on the phone and I ask about what are you doing revenue wise, and they usually pause and they pull up their QuickBooks, and then they try to tell me like, yeah, well, I guess last month I says I made 45,000, but I don't think that doesn't make any sense to me. What do you think is happening there?
There's lots of things that could be happening there. Like it could be what we just talked about.
Yeah, where they had a weird billing thing, or they had a supply house thing that they haven't paid off yet, or they did pay off or something.
Yeah, maybe their bill's due tomorrow. They got a $40,000 supply house bill.
Sure.
You know what I mean?
Yeah.
Or they got a bunch of van payments. Those don't show up on your P&L. That's on your balance sheet.
Oh, what?
Net on your P&L minus all of your payments may not be as much money as you think it is.
Wait, what do you mean your van payments don't show up on your P&L?
If you buy your vans and they're a debt to you,
Yeah.
it's considered a liability to your bookkeeper. This is the difference between CPAs and bookkeepers and business people. I view a van. I hate CPAs.
Yeah, I know.
I don't hate CPAs.
Yeah.
I know some very nice, wonderful CPAs. My mother-in-law is a CPA. I hate the way CPAs think about business. And I don't even hate that. Like, they can think however they want. But I hate that,
Is this one of your extreme political views?
probably. I hate that plumbers go into business and then they just think their CPA is
Like a
the
business.
god of business world. And and they listen to everything that comes out of her mouth
Yeah.
and then don't know what the heck they're looking at.
Yeah.
It's terrible.
Yeah. Your CPA probably does the tax stuff for a lot of different people and businesses.
Yeah, and she doesn't know what a healthy business looks like.
Yeah, because each business is going to have this is what I think, right? Tell me if I'm wrong, but each business is going to have a different breakdown on the P&L because each business has a different projected net margin, gross margin, overhead percentage.
Correct.
Like if you're running a marketing agency,
80%.
80% what?
80% gross. That's what you want to go for.
So 80%
Because
gross.
your cost of fulfillment is super low,
Yeah.
but your overhead is huge.
Yeah, sure.
It's all overhead. It's mostly overhead, right? So yeah, it's different.
Yeah, so for that CPA to be like, oh yeah, I know exactly. Let me just go to my file about what the business structure and model and plan for a plumbing business is, in best case scenarios.
Yep.
Here's what we should be looking for.
Yep.
Yeah.
Unless they just deal with plumbing companies and they've educated themselves about what a good like service plumbing company looks like.
Yeah, and again, then you even have to get that farther level down to a service plumbing company.
Correct. And nobody knows your business better than you.
True.
So
Well,
you should be the one that understands and makes good financial decisions.
Yeah.
Not your bookkeeper.
Yeah.
Yeah.
They don't want that either. Like
No,
they
they
didn't
don't.
they didn't say pay me this monthly thing to do your books and be responsible for your business.
Well, some of them like try to take that role.
Yeah. I guess so.
Like what? I can't remember the name or the term. Do you remember we had somebody in our course who hired as bookkeeper /
It's usually like a / micro CFO
Yeah.
or something like that.
Yeah.
And sometimes you'll see that as a technical service offered. Like they have a CFO certification.
So they dig into your numbers.
Yeah, they're chief financial operator, and they'll like
that is useless. I'll just say that hands down. Unless they have knowledge of what your type of business should look like on your P&L.
yeah,
Yeah. Useless.
yeah. And
Okay.
is it just they just won't like they're gonna just tell you like not good information or
They have no idea what they're looking at. How do they know?
yeah?
How can they go look at your P&L and say
Oh, this should be this or
your
this
labor
should be
rate's
this.
too high?
Sure.
And if your labor rate's too high, how do you change it?
Yeah.
And what's the right way to make it what it needs to be?
Yeah.
They don't know.
So at most they could just tell you something that something seems to be out of whack as far as the percentages are
that
concerned.
may or may not be useful to you.
Yeah, and then you have to
Yes.
go decide how to use that information or
Correct.
not use that information.
Correct.
So you might as well just have somebody just give you the P&L. You understand where the percentages are supposed to be.
Correct.
And then you can then look at and make the correct changes.
Amen, brother.
That's all I needed. That's all I needed. That's it for me, guys. Jared's got the rest of this one.
Okay, balance sheet.
Yeah, with the vehicles and junk.
You have your P&L. If you get a loan for your vehicle payments, you have the actual vehicle payment, right? And out of that vehicle payment, it's principal and interest.
Yep.
Interest is an expense. It'll show up on your P&L. You paid this much in vehicle interest, subtract this amount of money from your bottom line, right?
Yeah, and would that be in your overhead?
Yes.
Okay.
Yep. The
the
vehicle
interest.
payment, the principal, right, does not show up because it's paying a debt.
Wow,
Okay.
that is obnoxious.
That debt, you can write off that debt. Okay.
Mm-hmm.
And the rules vary. Well, they've been varying. It used to be if I bought a $100,000 vehicle, I could write off 100% of the vehicle. It's not called write off, it's called depreciation, but it's basically the same stinking thing. I could depreciate 100% of that vehicle the first year. Okay. So, or I could depreciate over a 5-year span.
Which would mean like what effectively at the end of the year?
If I had a $100,000 vehicle and I said, I'm going to depreciate the whole thing this year, it would lower my income by $100,000.
Okay.
Okay. Now, because that's debt, it's on your balance sheet. The money you're paying towards that debt is just going to lower the debt amount on your balance sheet.
Okay. Okay.
Okay. And it's what QuickBooks is assuming is you're going to depreciate this van because it's not an expense. It's a depreciable item. You're going to depreciate it over however many years you want to depreciate it. Okay. So you could depreciate $20,000 a year. So basically lower your income by $20,000 for the next 5 years. Used to be you could depreciate the whole thing. I think 2023, it was 80%. You could depreciate the first year. And I think 2024, it's down to 60%.
Oh, man, it's getting tough out there.
Thanks, Joe Biden. Thank you.
Thanks, Uncle Joe. Appreciate it.
That only hurts the little guy.
Yeah, 100%.
The big guys don't care if they can't depreciate all their vehicles this year. They're going to continue to do massive amounts of revenue next year, and they'll get the depreciation next year. So what?
Right.
The little guys sucks. Hurts the little guys. It's lame, especially if you're trying to grow your business. Because now you have to pay taxes on that 40% that you normally could have avoided, and you could have spent that money to grow your business, which would have then stimulated the economy and the world would have been a better place.
Well, Jared, bombs are expensive.
They are. I agree.
Just
So
saying,
is
somebody's got to pay for them.
So is our national debt. Somebody's got to pay that sucker down.
Yeah.
But the funny part is it's not going down. No matter how much more we pay in taxes.
no matter how much
doesn't go
a
down.
one truck, 2 truck business has to deal with a 20% depreciation change, which is significant.
Yeah.
Yeah.
Yep. So
Okay, so a balance sheet is a thing outside your P&L that holds all the principal payments on whatever debts that you have within your business.
Yeah.
So if you like bought a building
Yep.
outright, you mortgaged it or whatever.
yep, don't do that.
Okay.
BTW.
Yeah, but if you did that,
everybody's going to buying buildings.
yeah, but that
Joel,
but
Joel said I could.
yeah, Joel said I should buy a building, and then I just said okay, turned it off, and then I went and did that. And now you know.
He said I could buy a building and depreciate it.
Yeah,
Never pay
at
taxes.
120%, I'm making money.
Yeah.
Um,
Okay, that's true. But if you're gonna buy a building, buy it with a different company. Start up a company
Yeah.
that buys assets, buy the asset, and then rent that asset to your business.
Man, that's some 4D chess that you're playing right now,
Here's why. Are you ready?
dude. I'm ready.
Okay. That item, if you buy it with your plumbing business, yes, it goes on your balance sheet. Depreciation for buildings is a little different.
Sure, yeah.
You do a cost segregation on the building, which segregation is bad, but not when it comes to buildings, right? So
That's a good Jared Williams quote right there.
good one, huh? Basically, they go in and they split the building up. You're allowed to depreciate certain portions of the building over certain portions of time.
Interesting.
The entire building depreciates over a 29.5-year period. Okay. So the property is worth so much, the foundation is worth so much, the framing is worth so much, the flooring you can depreciate faster because it wears out faster, cabinets, things like that, right? So you go get a cost segregation.
Yeah.
That lets you know how much you can depreciate every year for the rest of the building's life. Okay.
And again, depreciation is really the result of that is you pay less on your taxes.
Correct.
Yeah.
You're
Which means
saying
you get to keep more of the money you made to go do whatever you want with it for that year of depreciation.
Correct. If I bought a $100,000 building, typically you can depreciate about 80% the first year, which would lower my income by 80 grand.
Yeah. So then when you go to the government, you're like, hey, take money from, instead of, let's say you made $100,000, you can say, hey, instead of taking it from $100,000, take the percentage that you would take from somebody who made $20,000. Even though you really made $100,000 over here, but since you bought this building, now you can depreciate it. Or you bought this van, now you can depreciate it.
Correct.
Gotcha.
Totally legal. Great way to make money.
Yeah, because then you can take, like what you did in your business early on is you depreciated a ton of your vans and you took all that money and you're like, let's lean back into the business really hard.
Reinvested every last penny.
Yeah, and then you're able to scale very quickly because of that.
Correct.
Well, and other things, of course.
Correct. Okay, so if you're buying a building, though, if your plumbing business buys the building, you get to depreciate the building over a certain amount of years. That's it.
Yeah.
If you start another business that buys the building,
and by that do you just mean you go to the state, you create like an LLC or a corporation or something?
Start an LLC.
Yep. Ka-chunk
Just
Industries.
Ka-chunk Industries, whatever you want.
Yep.
Like I have one, it's Gnarly Business Holdings.
Oh, dude, gnarly.
My rental one is like Gnarly Real Estate Holdings or something like that. It doesn't matter what the name is. Just has to be available,
Those are
right?
pretty cool names. I'm thinking of the t-shirts right now.
But that's why you see so many weird business names
yeah.
for like these back-end businesses because you just need a name that's available.
Yeah.
And then so I just picked a word and then everything is named what it actually is for. My real estate company holds my real estate.
Yeah, yeah.
Right?
You just picked a nice adjective for it that you like and then there you go.
Yep. So if you're secondly, you go start this LLC, right? It buys the building. That LLC gets to depreciate the building. Okay. So that LLC is basically probably not going to pay any taxes.
Yeah, because it's not going to make. Yeah,
it's not going to make any money technically.
Yeah.
Now that LLC can rent this building to your plumbing business
as it's like business.
Yeah,
quote unquote air quotes. Okay.
So think about this. Now your plumbing business has an expense, a rent expense.
Yeah.
You don't pay taxes on that rent. So the money that you didn't pay taxes on.
Wait, you don't. So if you're paying rent as your plumbing business to this other business, you're not going to pay taxes on all the money that you sent. So essentially, you're just lowering your taxable income by doing that.
Correct.
Like you make that money
for your plumbing business. You're lowering your taxable income.
Yeah. So you take all that money that you made as your plumbing business,
and you're taking that money, and you're sending it over to another business that you just happen to own, and then that business doesn't pay taxes on it as well
because you depreciated it.
So you get
at least for that year. Or
you're going to depreciate it like
over 29 years. Okay.
If you bought a building and you're paying yourself like $4,000 a month, you can probably depreciate very little of the building the first year and not pay any taxes.
Yeah, gotcha.
Right. So you would depreciate just enough to not pay taxes.
Gotcha.
Every single year, basically. Now you just avoided taxes on that money twice. So you basically got to keep way more money that way. You can do that with your vehicles as well. It's tough when you're a new business and you're starting out and you're learning all the business stuff and you don't know how to price yourself and you got multiple businesses and the cost of the bookkeeper keeping that all up.
Yeah.
So I don't recommend it. But
for the entry-level business
owner, just get your business making money, go buy some vans, get going. Once you're making a few $1,000,000, then maybe you can start thinking about that stuff.
Yeah.
Because what it does is it takes your attention away from making money and growing your business to how do I save money? How do I get away from paying taxes?
Yeah.
And your attention at that point in time would probably be a lot better devoted to just making more money.
Yeah.
Even if you have to pay taxes on it, it probably ends up with more return in your pocket that way.
Yeah. We talked and for like stuff about that, that's like what we talked about on our going through the plumbing business checklist episodes, just around the focuses.
Roadmap.
Yeah, the roadmap to success.
Roadmap.
Just that there's different things that you want to, part 1 specifically.
Part 1 and part 2.
So that you can know what to be focusing on the stages of your business.
Yeah, avoiding taxes when you're not making any money.
Yeah, doesn't
Useless.
matter.
Yeah.
Yeah,
You want to make money first.
And sometimes that's something that your CPAs can get you in trouble with. Because I've talked to guys like this where he's like, well, right now I'm moving like a one truck Chuck, and he's like, well, I'm spending all this time to change my LLC into an S-Corp because my tax guy says that it'll allow me to do this. And my frank conversation with him was like, hey, man, you should just worry about making money right now.
Yeah.
Because that doesn't make any sense.
Yeah.
You're not even making any money.
No,
so,
it really doesn't make any sense because when you go from an LLC to an LLC taxed as an S-Corp, all it does is, once you've paid yourself enough money, in an LLC, it's still technically all personal income. And so you get taxed I can't remember what they call it, the employer portion of the taxes you have to pay, which is quite a bit. It's like 9%.
Yeah.
So let's say you're paying yourself $100,000 a year, and then your plumbing business makes $200,000, right? Or makes $100,000 after it pays you $100,000.
Okay.
Well, you would technically have to pay the 9% employer tax on that $100,000. It's only $9,000.
Yeah.
It's not that much money. Like in the grand scheme of things, not that much money. But as an S corp, you would avoid that self-employment tax.
Gotcha.
Is what it is.
Gotcha.
And it only matters when you're making enough money to where it matters.
Yeah, I understand.
You're making more than what you're going to pay yourself, right? You have to pay yourself what's considered a livable wage. I don't think it's a livable wage. It's reasonable wage is the wordage, right?
Yeah, livable would be too high.
Yeah. There's no set dollar amount for what is a reasonable wage. It just says reasonable wage.
Interesting.
So you just have to assume, you have to say, is this reasonable? I think so.
Sure.
I would err on the side of caution. Just say, well, if I'm paying my guys, $50K a year or $80K a year, I should probably make $90K a year.
Yeah.
That seems reasonable.
Don't be like, I make $700,000. It's reasonable.
No. That would be dumb because then you're going to pay that self-employment tax on the $700,000. What people do is they say, I'll pay myself $10,000.
Yeah. Oh, I see. Gotcha.
Right?
Yeah. They go the other way.
And then I don't have to pay self-employment tax on the extra $80,000.
Yeah.
Well, if you get audited, IRS is be like, come on,
Yeah,
$10,000? That's not a reasonable wage.
Yeah.
Maybe. I don't know. Right? Who knows?
Yeah.
So I think I pay myself $90,000 a year. Seems reasonable. Pay the self-employment tax. Don't worry about it.
Yeah.
Yeah. Get over it. Anyway, don't get in trouble with your CPA.
Yeah.
Don't get in trouble by listening to your CPA and not thinking about what she's telling you and whether it's good for your specific business.
Yeah. Seems to me that there's it's hard to know that. It's hard to know your business well enough to push against your CPA.
It's common sense, dude. Just take a minute to think about. Just think about it.
Yeah.
The problem is your CPA is you should really set up an S-Corp because it'll save you taxes. And the guys are like, okay.
Yeah.
They don't ask why.
Sounds like they do. It sounds like I got to go put that on my to-do list. Set up S-Corp.
My CPA says that. I say, why?
Yeah.
She's like, well, it'll save you taxes. How? Well, and she'll explain it and I'll go, so it's what percent? 9%. Okay, so
you go do some math.
I'm not going to make any money this year. I know I'm not.
Yeah, sure.
I'm going to depreciate it all anyway. So I don't need to waste my time with this right now.
Yeah, gotcha.
Done.
Yeah.
I will say setting up an S-Corp, getting S-Corp status, it's just one form on the IRS website. It's not that hard. Just you could do it from the beginning.
Yeah, that's the
you could have an LLC and file for S-Corp status on the same day.
Yeah.
But if you haven't yet, just don't worry about it.
Yeah.
If you're a sole proprietor and you're not making any money, don't worry about LLC and S-Corp status. Worry about making money.
Yeah, you're not making any money. It doesn't matter.
Worry about the thing at hand.
Yeah, having an S-Corp isn't going to suddenly have you have the ability to make more money.
Yeah. I read something the other day about, man, I can't remember who said this. was something about, it was a very, very, very good business owner. He said, it kind of reminded me of myself. He said, that's right, dude. Don't laugh. Don't be laughing.
Sorry, I was laughing at something else. There's something funny that happened off camera.
Yeah, okay.
Yeah.
He said,
Jamie was making a face.
yeah. He said, I got to pee.
I know.
He said his greatest asset as a business owner was his ability to laser focus on the thing that needed his attention the most. I laser focus, but sometimes I laser focus on the wrong things. So, and his examples were like, if I was short on cash flow, I laser focused on making more cash flow. If I couldn't find employees, I laser focused on finding employees until it wasn't a problem anymore. And I think a lot of people lack that kind of stuff. The ability to say, what's my number one problem?
Yeah.
And then just laser focus until that's not a problem anymore.
Yeah. Oh, yeah.
If I can't get new customers, I'm laser focused on marketing.
Yeah.
Until I'm getting new customers.
Yeah.
That's it.
And then you're putting in whatever work is required to achieve that result.
Correct.
Because I think what happens is people will, quote unquote, they'll laser focus on that problem, but then they'll see what they have to do, and then they'll be like, I don't want to really do all that.
Oh, this is hard.
I'm going to go and think about something else now.
Work is hard.
And
I'm
then
going to go do the easy stuff.
Yeah, then they'll shift their focus to something else, knowing that what they actually need to do is all that other stuff.
Correctamundo. Okay, let's get into this sucker.
All right.
You're doing well.
Yeah.
Maybe you filed for S-Corp status. Your top line revenue is looking good. You're minusing your COGS out. Your gross profit is looking great.
Yeah.
Maybe you're at 60% gross. But then for some reason, you get down to the net and it's just 5%, 6%, even 15%. What are the problems? You want to know the biggest problem? It's this number one on my list right here.
Oh, everybody, he's got a list right there if you didn't know. I can see it.
Too much office staff.
Yeah, but I need all the people there.
The big problem is you're fat on overhead.
Sure, because on your P&L, that's the only thing that's left outside of profit.
Correct.
Is overhead.
Overhead.
Yeah.
If your gross is good and you got no net, you're fat on overhead.
Yeah.
Something happened. And a
That's why it's
lot
so
of
important to be able to like have your P&L structured properly and look at it.
correct.
Because then you could, when we're talking about laser focus, now you suddenly have a thing to focus on.
correct.
And it's not in pricing or material markup.
Now
It's in,
now you know what you can focus on.
yeah, let's focus on overhead.
My overhead is fat.
Yeah.
What do I do? Typically, go look at your office staff. People want to throw people at problems. And it's,
Why? So why is that? Like, what's the scenario? Like, does somebody approach the business owners like, "Hey, I'm a great office manager. I can help you with your paperwork," or is it the business owner like, "I just need somebody to help me with my paperwork. Screw it. I'm just gonna hire somebody."
I don't know, honestly, because I've never had this problem. I don't know. I've always ran super lean. We run lean to this day.
Yeah,
Like-
we do.
Like my general manager, he works hard. Our CSRs, they work freaking hard, dude.
Yeah.
They're swamped.
Yeah,
They're busy. Could we hire another CSR? Probably. Am I going to? Nope. Not until I absolutely have to have one.
yeah,
Not until I'm not going to hire another CSR until hiring that CSR
sure.
shows up as net profit down on my bottom line.
Yeah,
Right?
until you're missing enough calls.
To where I'm losing money on my bottom line.
Yeah. Or
And
you're
by
seeing-
hiring her, I
Yeah.
could make more money.
Yeah, or you're seeing a lot of one-stars come through, like they just don't answer their phones.
Correct.
And you're like, yes, they do. Service Titan says they're answering at a very, very high percentage.
Correct.
Yeah.
Okay. So
So what you're saying, even that, is you have to justify overhead through, like,
Dude.
by the numbers. You have to use like data from your P&L to justify, and data from Service Titan or whatever you got to justify that office position.
yep. You have to understand how all of your decisions, if I hire this person, what is that going to do to my net?
Yeah. Is it going to increase it or decrease it?
Yeah.
Because if it decreases it, then it sounds like that's not the right move.
Correct. Unless there are times where you need to hire some overhead in order to grow.
Sure, yeah, but that's sort of like reinvesting in your business.
Correct.
That's like, yeah, you bought a van out of net profit, but you know that the van will make you more money.
Correct.
Yeah, it's like I hired a CSR out of net profit, but now that CSR can make me this much more money. So, and I guess you'll know if you made the good choice because you'll see in the next couple of months when that asset starts to spool up and make money.
I would always err towards, I'm going to wait to hire this person until by hiring this person, it's going to equal more opportunity to make money on my bottom line.
Yeah.
That's what I would always err towards.
Yeah.
Always.
So what are some like interesting or weird or odd or foolish like positions in the office that you've seen people hire?
Honestly, I don't know what I would love to know, but because I hear about people doing this, I'm like, what do they do? I don't even know.
Yeah.
I don't understand. I can only assume. So I'll see people with like 1-to-1 ratio office staff to technicians.
That sounds insane. Everybody gets like a personal assistant.
Everybody gets a personal assistant. What are they doing? I have no clue.
I usually hear, because I talk, and all the guys that I talk to, there's usually something interesting in the office. Big things that I see that sucks up overhead is business partners. Those suck up overheads.
Business partners suck up overhead.
Spouses and family who are not necessary, but they're in there because
If you have spouses, well,
they're trying to help.
if your spouse is doing a job that needs to be done in the business, then fine. But if she's not, don't have her on payroll.
Yeah.
Or if she is on payroll, like separate that out on your P&L so you can see what your true net is.
Yeah.
You know what I mean?
Yeah, you need to have clarity on your data. Like, don't
Yeah.
lie to yourself by fudging it in some weird way. Like,
No.
you still need clarity on the data.
Correct.
And I think sometimes with some things that I run into is like the wife likes to do bookkeeping, so she does the bookkeeping, but she also does CSR stuff. And then they also have another bookkeeper come in and do part-time work to help out
moly.
with what the wife can't do because she's doing part-time CSR.
So I wouldn't have an in-house bookkeeper until my external bookkeeper cost me more than my in-house,
Yeah.
which is quite a bit.
I think sometimes there's this conception that, is that the right word? Maybe.
Misconception?
Anyway, there's this idea that you need to have a local bookkeeper. Because I've
Yeah.
told people like, hey man, just grab a bookkeeper from the internet. And
Yeah.
they're like, okay. Like I feel like that business owners, and I could be wrong on this, but that they think they need to go down to the local bookkeeper in their town and like use that person so that they can come physically to the business and like look at stuff.
No,
Yeah.
you don't. This is why I hate bookkeepers. Because that's something a bookkeeper would tell you. Yeah. I need to come down and look.
Yeah.
I need you to give me all of your receipts. No, you don't.
Yeah.
No, I'm not doing
There's the
that.
internet now.
Yes,
You can just see my bank accounts and like do stuff.
correct. The internet is your best friend.
Or your worst enemy.
I would say that I've seen people hire bookkeepers. I've also seen people have such complicated systems and processes and that they need the office staff to make that happen.
Yeah, like
So
yeah.
like if I was to go into a business that has office staff, I would, number one, look at my systems and processes. Like, how are we handling things from the time the customer calls all the way through?
Sure.
Like, what is happening?
Just do a systems
How-
and processes audit.
How many people are touching this? And can we simplify this? The simpler you make the process, the more money you're going to make. The less it's going to cost you to do it, the easier it's going to be for everybody to understand, and it's going to be easier to automate it too. And so I would look at that and go, okay, number one, can we simplify this? Yes. Okay, let's simplify it first. And then can we automate any of these processes? Yes. Okay, now it's even simpler. Okay. And then I would look at it and I would say, okay, are we using the people that we have doing these tasks to their full capacity? I've heard a lot of guys will take a ton of the burden off their technicians and have the office staff handle a lot of stuff.
Yeah, like estimates and stuff.
Yeah. And it's like, you're just have
or pulling permits.
pulling permits.
Yeah, because your techs pull permits, right?
We do it on the internet. So they go
Okay.
in, talk to the manager, they pull the permit.
Yeah.
But they'll actually go pick it up.
Gotcha.
Yeah, because we have to pick up a hard copy.
Yeah, gotcha.
Yeah, and pay for it in person, which is silly.
I
You
can tell
can't-
by your face that it irritates you.
It does, dude. It irritates the crap out of me. It's like, it's 2024, dude.
Yeah.
Can we just like file for a permit and get a copy of it online?
Nope, it's not the same.
Why?
Somebody can't alter this piece of paper.
Can I pay for it with a credit card all over the internet,
Nope,
please?
you got to do cash.
Dude, that's what it's like.
You got to write a check.
Yeah.
I need a cashier's check.
Oh, yeah. No, it's not that bad, thankfully.
Yeah.
You can pay with a credit card.
Oh, thank goodness.
Yeah.
There's no Apple Pay.
No Apple Pay. So I would look at that whole process. I would get it down to as simple of a process with as few people touching it as possible, with as much of it automated.
Yeah.
That will help you. You'll probably get rid of half your office staff that way.
Yeah.
Just going through your processes and thinking about it from that lens.
Well-
and then just looking at what everybody does. Like,
Mm-hmm.
okay, I have a full-time bookkeeper. How much does she cost?
Right.
I'm paying her $60,000 a year, and I can get a bookkeeper third party for $15,000 a year.
Mm.
Easy math.
Yeah.
Bye-bye bookkeeper.
Yeah.
Hello third-party service, right?
And the tough part about this, which is why you're the business owner, is sometimes if that bookkeeper is like your mother-in-law, then
Fire.
yeah, but like Jared, then
If you really like your mother-in-law, then use her in a capacity that makes sense.
yeah. But the point is that you come across these hard decisions that if you don't make them, you won't recover that net profit.
Yeah, correct. And I would like to ask this fictitious person. I just got a bad case of the stutters. Dude, the other day I stuttered so hard for like 2 whole sentences, and I was like, what's wrong with me?
You just have to take a break and like
Yeah.
reset.
I worked with a guy who stuttered a lot, and we would always make fun of his stuttering,
Mm.
which is normally a really bad thing, but he was really cool. And we would just joke around all day. He was a rad dude. It made me think of that. Anyway. So I would like to ask this fictitious business owner. It's a hard word to say. Why are you in business? What's the point?
To support my mother-in-law.
To support your mother-in-law or to make money? Because you can sit there and support your mother-in-law and have her on the books as your bookkeeper, and it's highly inflated, and it affects your net profit,
Right.
along with probably some other things you're doing. Because if you made that dumb decision, you're probably making another one.
Yeah. Yeah.
And at the end of the day, your business will not be profitable and not worth anything, and you don't make any money.
Yeah,
I mean,
so-
if you really love your mother-in-law, then just get a third-party bookkeeper and then give your mother-in-law the money that that bookkeeper saves you or whatever.
Yeah.
Move her into your home and take care of her. I don't know. Or create a job that actually makes you money that she can do, or move her into a different position.
Yeah, sure. Train her to be a CSR or something like that,
Yeah.
whether she wants it or not, which is all hard.
Yeah.
Like none of those things sound easy. They all sound hard to do.
Correct.
But the point is if you look at your P&L and these structures aren't proper,
Yep.
and you go to overhead and it's bloated, and you're like, well, that's because my mother-in-law is in there. You have a thing that you can solve, and if you're choosing not to solve it,
Yep.
it won't solve your profitability problem.
Correct.
It'll just make your business more at risk, which long-term, and then your mother-in-law is actually at risk.
Yep.
Because if this whole thing goes away because you have a couple bad months,
Let's say something happens to your mother-in-law or something happens to you financially, and all of a sudden now you're in a position where in order to keep going as financially, you need to sell your business.
yeah,
Well, your business is worth nothing because you're not profitable.
because you're
Had you kicked your mother-in-law off your P&L statement and made your business profitable,
yeah,
you could have sold and continued to take care of your mother-in-law.
and then had a track record of we make profits consistently. Because again, when somebody comes to buy your business, they're going to be like, let's see your books.
And you're
Like,
going to
let
go
me
to
look
them
at
and be
your
like,
profit.
well, I got my mother-in-law on my
trying to help
books.
her,
Stop
blah,
trying to
blah,
help
blah.
her. She's not really involved in the business. And that's like red flag for the business owner,
Yeah, or the business buyer.
the business buyer, red flag for the bank that is giving the person that's buying your
yeah.
business the loan,
Yep.
right? They're like,
The whole thing's gonna
I don't
crumble.
know. Yeah.
Yeah, okay.
You're not gonna get as much money for your business. They're gonna talk you down. All sorts
because of that one thing.
Yeah.
Yeah.
Yes. So too much office staff. So good rule of thumb. And I've seen what's his name? Who's the 10X dude? Grant Cardone.
Uncle G.
Who's his buddy? Brandon Dawson.
Yeah, there we go.
9-Figure Mindset. That's actually a pretty good book. I really enjoyed that book. It was cool. It was a cool read just to see what he's thinking about. He's got a thing out that's like revenue per employee, right? And so a good way to tell if you've got too much office staff or if you're just fat on people, right? You can, if you go look at your gross and you're good, like you're hitting 55, 60% gross, then take total revenue and divide by how many people you have. If you're over 350, you've got too many people. You can trim that down.
Or what do you mean over 350?
$350,000 in revenue per employee.
Okay.
If you're under 350, you've got too many people.
Okay, gotcha.
That number could honestly
the higher the better is what you're saying.
The higher the better.
Yeah. Okay.
I did the math for Prospector this morning. We're at 442,000 per employee.
Gotcha.
Yeah.
Okay.
So, and that's hitting. I think we hit 20. I don't remember what final numbers were. It was 22. By the time we hit final numbers, we were a little lower, 21, somewhere there, percent net for last year. So that took $442,000 of revenue per employee. If so, like you start going lower, there's a lot that factors into that, right? The more expensive markets, that number is going to have to be bigger per employee.
Right.
Cheaper markets, that number can be smaller per employee. But general rule of thumb, if you're under 350, something's wrong.
Gotcha.
You got too many people.
Yeah, gotcha.
Way too many people. So you've either got really unproductive technicians, which you're going to see in your gross, or you've got too much office staff that you're going to see in your overhead.
Yeah, you're going to see something in there.
Yep. Either of them are going to affect your bottom line. Okay. Should we move to reason number 2?
Yeah, because we could talk about, because there's so many weird scenarios in office staff. The one thing I will say, the thing that always confuses me is when people bring in an office manager. Like, and this is something that I would have to have more conversations with guys, because it's like in my mind, I'm like, what is the office manager supposed to do?
Yeah, they'll have I'm the business owner, they'll have the office manager, and then they'll have 2 CSRs, and then they'll have a dispatcher.
Yeah.
And it's like, dude, fire that office manager, fire your dispatcher. And okay. Some point in time, that makes sense.
Yeah, there are points in the scale where you need to have somebody to oversee the office staff who could be an office manager.
Correct.
And the GM has to oversee the technicians and the office manager.
But it's not at 1, 2, 3, 4, 5 million.
No, that's probably at it depends on how you want to structure your business, but
I can't say because I haven't been there yet.
Yeah.
But I can tell you right now, we did 5.3 million last year. Okay. With a GM and 2 CSRs. If we were to do...
And 9-ish technicians.
9-ish, yeah. On average 8, actually. If we think we can do 5.5 million this year without any changes, just by increasing efficiency, we should be able to add another 200,000. Easy. If we were to try to grow any more, we would at some point in time need another CSR.
Yeah.
In which case there would be 3. In which case we would probably need one of them to be the head CSR at that point.
Sure.
Right? And then eventually, now the general manager would oversee all of those people. Eventually, we would probably need to hire more technicians. So we would probably want a technician manager, a CSR department manager, and then a manager over all of those. Yeah. It's probably how that would end up working. And then eventually we would probably split up between plumbing manager and heating manager. Yeah. And we would split the crews up. Yeah. Right? That's probably how we would roll.
I think Jeff Bezos says one person should be responsible for the amount of people who would share 2 pizzas.
For the amount of people who would share 2 pizzas.
Yeah. So if you buy 2 pizzas, like you can feed like
one person.
I know, right? It's kind of funny. Like it breaks
Like,
down, right?
How big are these pizzas?
I think it's kind of like one person is going to eat like 2 slices of pizza. So it's kind of like.
And how many slices are in each pizza?
Should we call
Jeff?
like, yeah, we should call Jeff. We
Hey,
should ask
Jeff.
him. Hey, Jeff.
I saw your thing, but like,
Yeah. Just
like
break it down for me,
is this a
man.
30-inch pizza, a 20-inch pizza? What are
I
we
think it's
talking
kind of
about?
like one person to somewhere around like 8-ish people.
Yeah.
That's how many you can truly effectively lead, mentor, get them to do stuff.
Yep.
After that, it starts to get a little shaky, and that's when you need to hire more people to be able to manage.
Yep.
And hire a person to manage that. And then
Yep.
one manager over 6 managers.
Yep.
So on and so
I'll
forth.
be honest with you, like the way we're rolling right now, we're at max.
Yeah.
It's not we're
Yeah.
tapped.
Yep.
Pretty much. It's like everybody's rocking and rolling. But that's how it should be.
Yeah.
And I'm not going to add somebody else until it's like falling apart.
Tell me what you think about this. Do you think that the overhead, like the extra overhead, is more prevalent in businesses who do service and new construction, or service and these other things?
I mean, yeah, probably. But it's like people need to be thinking about those separately.
I know, because I'm just thinking of a couple companies that I know of where it's like they bring in this office manager, but that's because I think they're doing lots of new construction stuff. And so there's different paperwork and different billing cycles of stuff that the business owner himself can't keep track of because
Right.
he's still in the field, even though he's doing all this other stuff.
On your P&L, you need to split up your revenues by type.
Yeah.
New construction, service, and you need to split up your overhead that way as well.
Yeah, because those are different business models, so they're going to have a different P&L spread.
Correct. Yep.
Yeah.
I would split up as much as I could. And I would think about them separately.
Yeah.
Because you want your service department to be profitable and you want your new construction to be profitable.
Right.
And they're going to run at different margins.
Yeah, and
your
you don't-
new construction's going to run at like 3 to 7%. If I was you, I'd just shut it down and focus on service because it can run at 20.
Yeah.
It can run at 30.
Yeah.
That's what I would focus on because it's going to be hard to focus on 2.
Yes. Yeah.
You're going to get inflated overhead. It's going to get confusing. Your attention's going to be pulled to one or the other.
And you're not really going to know where the problem is because the P&Ls are they're scooshed together.
Yeah, and here's the thing: like, if your attention is divided, and you know that divided attention isn't good, right? Divided attention is unproductive attention.
Sure. Yeah.
It's like half the attention.
Yeah.
Right. And so if you've got these 2 things in front of you, and one of them can get your full attention or not. Like if you had to choose, why wouldn't you choose the one that just makes you more money?
Because your focus isn't on money, it's on I like this type of work. Or I'm comfortable in this.
There's something to say about liking that type of work. But then again, I would ask you, why are you in business?
Yeah, sure.
If you're in business for any other reason besides make money, then I would rethink my decision to be in business.
Yeah, it's too hard to do it for anything else.
It's stupid.
Yeah.
Like it's dumb. If you're if you're in business because you want the freedom, right? Freedom doesn't come from being in business.
Yeah.
Freedom comes from being in a business that makes money.
Yeah.
That's it.
Yeah, the freedom is the byproduct of having the money that the business creates.
If you don't have the money, you don't have the freedom.
And sometimes even if businesses are run certain ways, you might have the money, but you can barely afford to take use of the freedom because the business needs you so much.
Because you don't have time freedom.
Yeah, you don't have time freedom. You got all the money in the world, but you can barely take time off because if you do, the whole thing breaks.
Yeah, and that sucks.
Yeah.
Sucks bad.
Kind of, yeah.
That's the worst.
Yeah, because then you see, anyways, that's a whole nother conversation.
Let's move on to number 2. We can go through this one kind of quick, and then we'll hit 3 and 4. Because 4 is my favorite. Passenger princesses, man. You know I hate passenger princesses.
I know you do. Yeah, that's why you only have one seat in all your vehicles.
We took the other seat out. Screw them.
All your personal vehicles.
No, we did not. Yeah, my GM calls them passenger princesses. Basically, if you've got service guys out there, they can do service by themselves. That's it.
Oh, is this?
You don't need 2 people running around in a truck all the time.
Is this something that we could lump in the whole idea of like, because guys want to jump to this move real quick. They want to be like, I want a sales team and I want installer teams.
Yeah.
Like, when is that appropriate within a business? Is that appropriate when it's like 4 guys?
So again, I haven't got there myself.
Sure.
I can see it's close to appropriate in my business right now.
Okay, gotcha.
We could almost get there.
You could almost look at it and go, that would increase bottom line if I just had a guy.
It's a matter of your service department has to produce enough install work to keep your install crews busy. Right?
Yes.
Right now, my service department does not produce enough install work to keep an install crew busy all year round.
Mm-hmm.
That's it.
Yeah, so it's just understanding your limiting factor.
I'm really close.
Yeah.
I could probably pull it off.
Yeah.
But I don't want to.
Yeah, because it's working right now and it's got good margins.
I don't think it would. Right now, I don't think it would help my margins at all.
And I think that's important, though, because the way that you're thinking about it is wise. Because you're not going, this is how I've seen businesses work, or this is the business that I came from. Yep. I'm going to just copy them.
Dude, don't copy what other people do because you don't know if what they do is effective.
Yeah, you don't.
Even if they are, like, if you worked for a boss, I just ran into this today. If over a commission structure, right? So you can map out commission structures on a spreadsheet. This is what I did for our coaching call last week. I took the 4 most common commission structures and I mapped them out on a spreadsheet to see what it looks like if a guy produces certain amounts of revenue. So we can see how that affects our gross profit margins.
Yep.
Okay.
Yep.
Some ways are better than others.
Yeah, gotcha.
Some commission structures, if you structure them wrong, as the technician produces more revenue, increases the amount of gross profit that he takes up.
So on the outset, it looks like a good commission structure. You think it's good until you run the revenue numbers to a certain level of scale.
Then when you map it out, you're like, oh, this actually is kind of poopy.
Huh.
Now, there's some that are good.
Yeah.
Right?
Sure, like good through the whole way.
The whole way.
Yeah, cool.
But when you look at them all side by side, some of them are better than others.
Yeah.
Right? Some of them, as the technicians do more revenue, your business becomes more efficient. Their percentage of gross goes down, which is great. So as the technician makes more money, the business makes more money as well. All from how you structured the commission structure.
Yeah, because when their gross goes down, your net goes up. Is that true?
Correct.
Okay.
Yeah. Because
then that percentage shifts on your P&L and then the net starts to creep up.
And where does it go? When the percentage shifts, when you take when you take away some of the labor up there, it goes
right to the bottom,
all the way down to the bottom.
Yeah, because it doesn't go to like overhead because that doesn't make any sense. It just goes straight to what you get to keep.
Yes. Okay. Yeah. Now, there's and general rule of thumb is you want to keep your labor cost under 20%. So you could look at a very successful company that has a very successful commission structure. So you think on the outside, these guys are making tons of money.
Sure, the company seems to be doing well. It's growing.
Yeah.
The business owner takes vacations. It's awesome.
You have no idea what their net margins are.
Yeah, the business owner could be like, I'm down to have 5% net margins and take vacations and pay people super, super good.
He could be at 15, which is pretty typical.
Sure.
Maybe you want to run your business at 20.
Yeah.
25.
Yeah, you're a different person. You got different goals.
Why wouldn't you? Again, back to the original question. 10 million at 10% or 5 million at 20%. I'd much rather have 5 million. So what ended up happening is we took this other commission structure from this, successful business and it worked out to where it's 24% of your gross goes towards labor and it never changes no matter how much money the technician produces. And so the technician would make a ton of money.
Yeah.
Right?
Yep.
But the business never gets more efficient as the technician produces more. So there's only a benefit to the employee.
Yeah.
That's it. And so, and it was some other confusing things in there as well. But it's like, I don't remember what the original point of this conversation was.
Like the point on your paper or the point of this conversation right here?
The point of me telling you about this.
Well, I was talking about install crews And what I really was talking about is you make decisions not based upon what somebody else is doing,
There you go.
but you base them on data on
So,
what your P&L is saying.
We could just take this business. Yeah, this guy's super successful. He's
Yeah.
making 15% net. He's got a $10 million business, let's say. And I'm going to copy his commission structure because it worked for him. It's going to work for me.
Right.
What you need to do is think about what you're doing, understand it, how it affects your P&L, how it affects your business. Make smart decisions based on data.
Your data.
Your data, not just off copying somebody else.
Yeah. Off the data that they gave you or you heard.
Yes. Learn to think about these things for yourself. Learn to think about how they affect your P&L. Because that's the ultimate thing. We're trying to affect our P&L at the end of the day.
Yeah.
Right?
Yeah. P&L's king.
Try to make that bottom number as big as possible.
And if your choices aren't making the bottom number bigger,
Correct.
then you've made the wrong choice.
Amen.
That's 2 amens I got this podcast. Woo! Holy moly.
You're on a roll, dude.
Dude, I'm getting a raise.
Okay, so one of those choices is passenger princesses, dude. You don't need them.
Yeah, like The Apprentice. What about like what are some circumstances where you do need them?
Okay, the only time you need a passenger princess, and this has been my rule of thumb, and you can think about this for your own business and see if it makes sense for you.
Sure.
I would not keep a passenger princess. Now, I would never have just passenger princesses that ride around like everybody has a princess in their van.
Oh, sure. Like everybody gets their own
Everybody
apprentice.
gets a helper.
Oh, yeah. And also let's define passenger princess.
Helper, apprentice,
Somebody
drives in the passenger seat
Yeah.
and helps you do your work.
Gotcha. Somebody who can't independently make money.
They're just taking money straight from your bottom line.
Yeah. So they would go in the overhead section. They wouldn't actually go in.
I wouldn't put them in COGS. I would put them in overhead.
Interesting.
And I would say they are one of the employees that are causing me to have inflated overhead. That's how I would think of them because they're not really producing. Are they making your guys faster? Maybe a little bit. Are they 100% faster? Are they double the speed? No,
definitely
absolutely
not.
not.
No way.
Are they useful 100% of the time? Absolutely not. Probably 90% of the time they're not needed,
Yeah.
right? So why have them there? If you don't need them, why do you have them?
Well, because the other business had 'em.
Like, take the money you're paying the passenger princess and give it to your journeyman instead.
Sure. They'd probably like that.
That'd be a much better move. Okay, now there are a few exceptions to this. I have never done business in a giant city like New York,
Or San Francisco.
where a lot of the guys say, and I don't know if this is true, so I would audit this for myself.
You'd have to look at their P&L and say, show me
Yeah.
that your overhead is not.
Well, so a lot of them say, look, I got to have a guy because we don't have parking.
Yeah, or
So
else I offset the passenger princess cost in just parking tickets.
Yeah. Or whatever.
Yeah.
Right. In that case, okay, maybe it's needed. But I'd be really like thinking about that.
Yeah, really math that out.
Yep.
And see how that
Really,
goes.
really math that out. The other thing I would do in that case, like if this person's really needed, then move him up to your COGS.
Okay. They're really needed.
If they're really needed, move them to your COGS.
Yeah.
If they're not,
They stay
count
in
them
the
as overhead.
Yeah. Also, you get confused on your P&L.
Yep. The other time I would have a helper or an apprentice is for an install crew.
Sure.
So if I had an install crew where they were doing work where there are two hands needed, like they're digging up a line and they need a guy on a piece of equipment and a guy with a shovel.
Yeah.
Or they're going in and installing bigger, heavier equipment.
And that's like a consistent scope of work that you're doing. That's not just like, oh, every month I get an install.
Correct.
Yeah.
I would want to be able to keep this passenger princess or the helper or the apprentice busy on work that needed two guys at least 75% of the time.
Yeah, not like go hand me the bolt.
Yeah. Nope.
Yeah.
No thanks. That would be my rules of thumb.
Okay.
That's it. Let's move on to number 3. It's my favorite.
No, number 4 is your favorite. You already said that.
No, number 4 is my favorite. Number 4 reason is my favorite. I like the number 3.
Oh, dude, I'm right there with you.
Thanks, dude.
So dumb.
It was.
Okay, go ahead.
Actually, you want to know something funny? You probably already know this, but I got married on 4/4/4. It was April 4th, 2004. Coming up on my 20th wedding anniversary.
Yeah, that's awesome. Good for you.
It's wild.
My daughter was born at 3:33 in the afternoon.
No way.
Yeah, on April 22nd.
I thought you were gonna say April. I thought you were gonna say March 3rd.
Yeah.
That would have been way
That would
cooler.
have been crazy. Yeah.
March
Yeah.
3rd.
March
That'd have
3rd,
been like,
3:33. Yeah.
What's going on?
Yep.
Okay. Number 3, products and services that don't drive revenue. You would not believe how many people waste money on a bunch of useless crap that doesn't do anything for their business.
Like what?
So when you're looking at your overhead, right? Maybe you ran your, revenue per employee number and it was good. And so you're like, okay, I'm good there, but I still don't have any net. What's going on? My gross is good. What's going on? I don't have any net. What is it? What's going on? I got too many other bills. That's when you need to go in and audit
I see.
all of your bills.
Yeah.
Like you should be doing that regularly. So like what I see a lot is, this is an example I thought of today. I love Service Titan. Okay. I don't get paid by Service Titan. We have no affiliation with Service Titan. I do have a Service Titan link that you can click and give me $1,000, which is nice, but only because I use Service Titan that I have that link. When you sign up for Service Titan, they try to get you to sign up for all sorts of other services, right? They've got Marketing Pro. They've got Fleet Pro. They've got Payroll Pro. They've got, I don't even know, tons of
I think
them.
they got like a Pricebook Pro too thing.
They got Pricebook Pro, right?
Yeah.
You could sign up for all of them, whether you need them or not.
Oh, sure. Yeah. I mean, and honestly, it's as easy as you being on a sales call with their rep and their rep just being good and selling you a bunch of stuff.
And that rep might not even be like trying to sell you on that stuff. He's just showing it to you.
Yeah. And you're like, yeah. And he might be like, this could be the use case for these things are these, and these. And this is typically what we see when people use these. And you'll go, I want those results.
Yeah.
Let me get that.
Yeah.
But so like, why wouldn't you sign up for those things?
Okay.
If that's like the
Dude,
spiel. I'm
if
already trying to buy them right now.
If I have 2 trucks, do I need a fleet management software?
I don't know what that does, but probably not.
Do I need to spend $1,000 a month on managing my fleet when I have 2
Where my
vehicles
trucks are. And you're in one of them?
and I'm in one of them?
Yeah.
Do I?
Probably not.
Probably not.
Yeah.
Probably not at all.
Comes back to like really understanding, really like saying, why would I need that? And then think about your context and be like, why would I need that?
What you need to ask yourself is this going to drive money down to my bottom line?
That's a great question. Not continually. Everybody listening to this, you should write that on, like write it on your like sticky note, put it on your mirror, put it on your steering wheel.
Is this just going to cost me money or is this going to drive money to the bottom line?
Yeah.
Is this going to help? 2 things you should ask. Is this going to increase revenue? Or is this going to help me drive more of my money down to the bottom line?
Yeah.
Like increase efficiency,
Yeah.
right? Those are the 2 things.
Yeah, because increasing revenue is a start.
Yep.
Ultimately, that bottom line is what you're looking for.
Increasing revenue, if you don't take on any other expenses, or if the expense that you're taking on drives more revenue than the expense,
Yeah, sure.
well, then that's going to go to the bottom line.
Yeah.
Right?
Yep.
But in order for that thing to, like, it either has to like increase revenue somehow by like bringing in more work, or it has to take a higher percentage of that revenue you're already bringing in and drop it to the bottom line by increasing efficiency. That's it. If it doesn't do those, you don't need it.
Yep.
That's it.
Okay.
Again, what's the point of being in business?
Making money.
Making money.
Saving grandma.
Saving grandma.
No, making money. Saving grandma's not the right answer.
Okay. But you need to take this a step farther too.
Yeah.
Like let's take Pricebook Pro, for instance. If I just signed up for Service Titan, should I pay them another, I don't know how much they want for Pricebook Pro. Let's say it's $500 a month. Should I pay them $500 a month for Pricebook Pro?
If it's a software that like makes a price book for you,
Yeah.
probably not. I mean, I would just say no.
Can I make my own price book?
Definitely.
Heck yeah, you can.
Yeah. I mean, if
Will it save me $500 a month?
yeah.
Heck
It'll-
yeah.
The only thing it'll take is just like, that day on that weekend, that Saturday.
Yeah.
If you
buy
laser
Pricebook
focusing
Pro for 1 month, copy all the stuff in their price book, and then turn it off.
Yeah, there's probably a contract with it.
There probably is.
Yeah.
I think it's a year.
Yeah, so definitely just
Yeah.
make it yourself.
Yeah. Or go. Yeah. I mean, I would just make my own price book.
And well, that kind of comes back to, again, like,
So many other people will share their price book with you too.
yeah, sure.
And
If you really want to get somebody else's price
Yeah.
book, you can just ask and they'll probably give it to you.
Yeah. And I would never just copy somebody's price book. I would always go through there and make my own. But I've bought Pricebook Pro before. I made this mistake. I was like, I wonder what's in here.
Yeah.
Oh no, I got it for free. That's right. They give me a
Nice.
free version of it. The amount of work I would have had to do to Pricebook Pro to turn it into a usable price book for my business was a lot of work.
Yeah.
It was easier for me to just build my own.
Yeah.
So that's what we did.
I think there's this big thing where it's like, what is it? Shiny object syndrome.
Yeah.
Where it's like, especially, okay, so this comes into play when you're like part of big home services groups and you hear all these businesses acquiring these things and they're like, this is rad, I'm making all this money. And you're like, okay, well, I guess I just have to get the things to make the money. And you feel like if you don't have it, you won't make the money.
Yep.
But the crucial thing that's missing is you have to really understand, again, how does that thing actually affect your bottom line?
Yep.
Because if you can't see the direct relationship between that thing and your bottom line, don't buy it.
Correct.
Because you don't understand it. And
Correct.
honestly, it might affect the bottom line, but if you don't understand how to use it,
Yep.
it doesn't matter.
Yep.
Because it's not going to affect the bottom line. It's just going to distract you and you'll lose money.
Correct.
So there's so much that comes into, you just got to understand what you're doing before you go and get all this cool stuff.
Yep. Definitely. Keep it lean and mean.
Yeah. Yeah. Keep it lean and mean.
There's a book, I think it's called The Toyota Way. It's a good book. People should go check it out. It's all about lean and mean.
Yeah.
Yeah, it's cool. There's also a good book on Netflix about, it's not on Netflix. The book is about Netflix. Can't get books on Netflix,
There's no
guys.
books on Netflix. I don't know what you're doing on the internet, but I don't think you know
I
what
read
you're
books
doing.
on Netflix. What are you talking about?
Yeah, I read them on all the time. They just move really fast and all the characters talk at me.
Yeah.
Is that not a book?
They're really good.
Yeah.
The only books I can read for some reason.
Yeah. If it has subtitles, Jared, it's not a book. It's
No, there's
still
a
TV show.
There's a book about Netflix. Super good because they went through like a hard time and they ended up having to lay off like, I want to say 60% of their staff. Or maybe it was 40 and they kept 60.
Sure. Either way.
But what ended up happening is, and then like their problem went away, right? So business took off again. And they were left with a much smaller percentage of their staff. Ended up being just as productive. And they were like, huh. And so like their rules are there are no rules.
Yeah.
Like they have a handful of rules, but they're like wild.
Yeah.
It was a cool book to read.
That kind of goes with the passenger princess point where, again, there's this argument that's like, well, they make my guy so much more efficient.
Yeah.
And
No.
the problem with that argument is you actually don't really know that.
No,
And chances are they probably make
we
the
do
guys
know the
less.
answer to this question. This has been tested. They do not increase efficiency. They decrease efficiency.
Yeah, that seems
For
much
the
more likely to me.
dollar amount for production,
Yeah.
they decrease efficiency.
Yeah. It only takes one really funny apprentice to derail that journeyman for...
It is less efficient. The numbers are there. I promise you.
Yeah. Okay,
People
cool.
have done these studies.
Yeah.
Okay. Should we move on to number 4?
Yeah, just recap number 3 really quick.
Products and services that don't drive revenue.
Boom. Got it.
They don't increase sales or drive revenue.
Okay.
And if you buy these and they don't increase sales or drive money to the bottom line, get rid of them. If you're like, oh, this sounds like it'll really drive more revenue, or this is really going to bring a lot more to the bottom line, and you get in it and you're like, crap, this does not do what I wanted it to do.
Yeah.
Turn it off.
Yeah.
Cancel it. Don't resubscribe.
Yeah.
Okay. And audit that stuff all the time.
Sure. Yeah. Yeah. Yeah.
Go
Again,
through-
coming back to your P&L and...
Go through, don't comb through your P&L.
Well...
Comb through, like go into QuickBooks and print off a list of expenses and go through your expenses.
Yeah, and your bookkeeper should be giving you that list as well. Like, hey, here's
you
stuff.
might have to ask for it.
Oh, okay, gotcha.
I go into QuickBooks and I look.
Gotcha.
I'll go look at the specific categories, each category on my P&L. I'll go look at what's in that category. Number one, you get to see if anything's like mislabeled, which is nice because sometimes like in QuickBooks, something will change on the way the processor processes the payment, and it'll automatically get classified as something else.
Yeah, you got to reclassify it. Yep.
And the bookkeeper
yeah.
won't catch it.
Yep.
So you have some stuff get classified wrong, and you'll be like, why are my auto expenses so high? And you'll go look,
Yeah.
and you just have some stuff classified wrong. But all that stuff is important. You should be looking at your expenses and going, okay, do I really need this?
Yeah.
Is this driving revenue? Is this making us more efficient? Am I getting more on the bottom line from this product? Probably not. Kill it.
What about like things like branding, where it might not drive, like up here in your brain, it's going to drive revenue, but you might not see that relationship for a while.
Correct.
Like, so like, what do you do with those things?
Common sense. If more people know who I am,
Sure.
I'm probably going to be better off and get more work. Like we can see examples where a good brand and brand awareness is a good thing.
Yeah.
There's a reason the like big companies like Coca-Cola and those kinds of companies, they don't run direct response ads.
Right.
It's all brand.
Yeah.
Everybody's favorite beer, Bud Light. It's all brand. They don't send you a click this button, buy 10 beers. They're 10% off right now.
Yeah.
They don't do it.
They don't need to.
They don't need to.
Yeah. So there are certain things that will drive revenue, but not necessarily as quantifiable as other things.
Yeah. I would say that's like most things. Most things are like that.
Sure. I guess there isn't.
You have another office staff member.
Yeah.
And you have to ask yourself, is this person really driving revenue?
Sure. And then you have to actually go through like a quantitative assessment. Like,
Yeah.
what is the things that, like, what is the bank balance when they do their inputs,
Yeah.
and a qualitative? Maybe they increase morale by like a whole ton, and they do a really great job, and that does something over here.
I would figure out how to do that with an employee that produces as well.
Well, sure. But the thing is before you lose it, you run it through a couple different vectors.
Correct. Yeah. Use common sense.
Yeah.
Don't be dumb. Really, it just boils down to just let's think about this for a minute.
Gotcha. Yeah.
That's it.
Yeah.
Which we know most people don't think about things.
Yeah.
If you would just start thinking about things.
Oh, but Jared, thinking so hard.
I know. But if you would like really think about things and try to understand them, and when you don't understand them, like Google it and YouTube it and figure it out, your life gets so much easier. Because now you can make good decisions.
Sure.
Based off facts
Yeah.
and data, not I feel this way or somebody said this thing.
Or they're doing it, so I'm just going to copy it.
Yeah, correct. You have a real, actual understanding of your business,
Yeah.
which feels good,
Yeah.
right? Okay. That's how like people do stuff out of the norm. They get a deep level understanding of it, and they know if I tweak this, nobody else is doing this, but I know because I have such a deep understanding, if I tweak this, it's going to have this effect.
Yeah.
I'm going to kick all these guys' butts.
Yeah.
That's how we get Amazons.
Yeah. Sure.
It's a deep level understanding of something, right?
True.
Okay. Number 4. This one is a little outside the box, but it's my newfound favorite one. Live within your means. You may not be making any money because you're spending it all
That's impossible.
on dumb crap, right?
Yeah.
Like if you're constantly taking the money from your business and never reinvesting it back in your business, if you're constantly like trying to pull every single cent you can because your personal life is a disaster
Sure.
and you can't live off a reasonable wage, you're going to have a really tough time growing your business.
Or if you misunderstand, the likelihood of continued success and growth in your business, and you say, oh my gosh, I went from making $5,000 per month at my job, and now I'm making $25,000.
Let me go get a $10,000 a month house payment.
Yeah, let me go. And then maybe you have some weird tax advice because you're like, well, I can depreciate this, do all this crazy stuff. But then you really balloon your standard of living because you just quote unquote made it. But you didn't make it. You just had a couple months that maybe, honestly, you might have had a couple months where your P&L wasn't lining up, or you didn't even have a P&L, and you lost track of something, and then suddenly you
don't even know if you made money or not.
No, you don't.
Yeah.
And so, yeah, it's like in my mind, it always seems like I would say approach your business like cautiously optimistic. When you're like seeing growth trends, you're like, okay, let's this is good.
So that's true, but like I would say if you're seeing growth trends and you get a fat amount of money like hits your bank account and you go spend it all, it's going to be bad.
Yeah, don't do that.
Don't do that.
Yeah.
Like you might have a bad month next month. Who knows?
Yeah.
So on a month-to-month basis, bad juju. But even like somebody who has a business that's legit, that's running, that's profitable, and it's making good cash and has a history of making good cash, and you've got a nice nest egg in there for your business, but then you pull every other thing out and you're just living the wild life over in your personal life, right? And you're spending all the money you're making.
Like all that bottom line. You're getting your paycheck from the business and then you're spending all the bottom line.
Because
you're the business owner. It's your business.
You're spending all the bottom line. That's what it's there for, right? To spend. Money's there to spend.
Right.
But I can tell you right now that you lose your freedom.
True.
There's a huge amount of freedom to be had from living off less than you make. Huge.
Yeah.
And the wider that gap gets, the more freedom you get.
That's true, because if you're living off of an income that's like, if you're living off of $90,000 per year and you're comfortable in that, and that's like your life and you're down to do whatever you want under that income, but then your business is making, well, we'll just say it's making you $1 million per year.
Yeah.
You could literally do anything you wanted.
That's $110,000 of surplus. 110, jeez. That's $910,000 of surplus.
Yeah.
Dude.
So that's ultimate freedom.
You got no worries.
Yeah, you're good to go.
It's awesome.
Whereas if you grow that and then you're like, well, I live a $985,000 per year lifestyle.
That's tight.
It's super tight. And now you have to worry about it.
If anything happens on the other end, you're screwed.
It's the same thing as living a $90,000 per year lifestyle on a $100,000 per year income.
Which most people do.
Yeah, which sucks.
And that's it does. And that's the reason that when people go into business and they start learning it and they start making money, they automatically start to creep up their lifestyle. It's called lifestyle creep. I would be super wary of that.
It's super easy to do too. It's always in the little things.
Super easy.
It's a little thing. Well, let's upgrade this. Let's go buy this because we can. Let's go get this because we can. And then eventually you're like, whoa, we got to slow this down.
Yep.
And then it's really hard to slow it down because it gains momentum. You gain accustomed to a certain level of whatever.
Yep.
Next thing you know, you're living paycheck to paycheck, making a lot of money.
Yep. And I will tell you right now that the house, the fancy house, the nice cars, what do people spend on? The cool clothes,
the watches. There you go.
The Gucci bags, the
Rolexes,
the Rolex watches.
Yeah.
That stuff brings you like extremely temporary happiness.
You're probably actually more excited to get to the point that you can buy it than when you actually buy it. You're like, damn, I guess I have this now.
Yeah,
it's kind of.
So I was. You remember my boat picture hanging on the wall?
Oh yeah, of course I remember your boat.
Yep, I wanted to buy the boat, but like when I got to the point where I could buy the boat, I was like.
The thing is,
the boat isn't gonna make me happy.
And you just thought through it, and you're like, well, then I gotta get a truck, I gotta get a trailer, I gotta make time to use the boat.
Yeah,
I gotta buy gas, I gotta learn how to use the boat.
Ain't nobody got time for that.
I don't care about boating this much.
I had a boat before. I used it. I think I used it twice. I owned it for like 3 years. I used it twice.
And even in our context, where we're in Alaska, it's like, yeah, we'll take it fishing once a year.
That might have been worth it right there.
I mean, honestly,
fishing once a year.
I mean,
that's pretty fun.
Especially where we'd go get a bunch of fish.
But like we could just go fish with. We got buddies with boats. We'll go.
Yeah, and you could just pay them.
Yeah, like, we'll go hop on their boat.
You could even pay them like an exorbitant amount of money relative.
Yeah.
To like, you still wouldn't pay the amount of boat. But you'd be like, dude, I'll pay you $5,000 and let's go boating. He'd be like, hell yeah, dude, I already got a boat.
Yeah.
He'd be stoked.
Super stoked. Super important.
Yeah, and that's a constant game.
It's a constant game, and I think like it boils down to the point like, and this is something I've been thinking about a lot is when you make a certain amount of money, it's different for everybody, I'm sure. For me, it happened relatively quick. After a certain amount of money, more money doesn't motivate you anymore.
Sure.
Having more money or more stuff or more things, it doesn't make you any happier. And so, like for me, I spent most of my life not making enough money, constantly focusing on trying to live off less so that I could have freedom because I love freedom. And the second I made more money than I needed, it was like ultimate freedom. Loved it. But then I was left with, well, what makes me happy?
Yeah.
And that's a whole nother question. It's not the money. It's not the freedom. It's not the stuff. What is it? Right? And I think if you were to try to, number one, if you were to live above your means, you're never going to find the freedom. You'd never have the time to think about what makes you happy. And then, number two, all that. Like if you lean into like, I don't know, house on the beach or fancy cars in your garage and whatever, it's temporary happiness. Ain't going to make you happy. I have never bought one thing, material good, and went, I'm so happy.
We actually were talking about this on a bike ride a long time ago. Like the last time we legitimately got excited for a purchase. Yeah. And I don't think you or I could really come down to like, I'm like giddy for this purchase like when I was a kid. Yeah. Like typically when even if it's a thing that I've been looking forward to, like I'm already like, I don't know, it's sort of weird, right? Because it's like I buy it and I'm like, cool, I finally got the thing.
Sweet.
And then I'm like, all right.
Like you just bought a
drum
set not too long ago.
When I moved here.
You probably always wanted that drum set.
Actually, no, I didn't really care. No, my wife, well, okay. Yeah, I was looking at this type of drum set for a long time, especially when I was like playing lots of drums. It'd be cool to have a real drum set, not like a crappy one. Yeah. I wasn't going to buy it. And then my wife was like, hey, you should get an adult big boy drum set. I was like, all right, sure, whatever. I got the money. Sounds good. So I bought it. And it's cool to look at. Whenever I look at it, I'm like, that's a nice drum set.
When you play it, it sounds dope.
Yep, sounds good.
Yeah.
But it didn't like fundamentally change my life.
Yeah.
Didn't really make me any happier.
Yeah. I think during that bike ride, we both settled on like some of the happiest times are like waking up in the morning and getting to drink my coffee.
Dude, yeah. Yeah, or just
like that's one of the things that I look forward to the most. In my mind, I live an incredibly blessed lifestyle simply because I still wake up to an alarm clock, but I don't have to.
Yeah, sure.
And I go downstairs and I make coffee and me and my wife sit together and we drink coffee. It's the best thing on the planet.
Yeah, I love just like going on walks with my wife and with my family, or just like even like right now, I'm very grateful that I can walk outside and the birds are chirping and it's hot.
Yeah.
And I can like...
It's not 40 below.
No, and I'm like, I'm outside. Like my neighbors
think I'm muddy because the snow's melting.
Yeah. You go outside and be like, hey, I'm outside right now. And they're like, yeah, cool, dude. And I'm like, you don't understand. I couldn't do this before. Like,
I spent the last 37 years inside. And then, well, not you, but...
Yeah. And they're like, is this guy a prisoner? Is he a convict? Like, what's he trying to say? Did he escape? I don't understand. Yeah.
That's funny.
Yeah. I hope they think that. That'd be funny.
Okay. On a lighter note, before we end this thing, we went and saw Jim Gaffigan last night, and he was funny.
He was funny. Yeah, I laughed a lot.
So did I. But I would so much rather watch that on my couch, dude.
I know. We're like, we're getting to become the stripe of that person, that old person who's like, yeah, I don't really need to be in an uncomfortable place waiting for a long time where I can't use the bathroom very easily
to
or
see
eat what
Jim
I want.
Gaffigan in person.
Yeah, when honestly, I can see his face better from a show that's better lit through Netflix.
Well, the funny part was I just watched the TV screen the whole time anyway.
You know what's funny is I intentionally watched him because I thought I don't want to watch the TV screen because I want to see what he looks like because I can watch the TV screen at home. My purpose here isn't to watch him on the TV screen. It's to watch him.
I couldn't see him because the girl in front of me's hair was too poofy.
Yes, you gotta watch the TV.
I had to watch the TV unless I stood up or something, but that would have been weird.
But it even comes down, it's like you and I both recognize that it's much more fun to like bring your friends to your house, watch a thing together on the TV.
Heck yeah.
Then like drive across town, sit in traffic, get parking, get rained on, get in the line, like do all this crazy navigation.
Yeah.
But man, cool, Jared. It was a good conversation.
Okay. See you, Holmes.
See ya.